Good morning, everybody. This is the Live Market Open for Monday, May 23rd. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Happy Monday, everybody. As always, in this morning's show, in the morning open, we'll discuss recent developments in markets, charts and levels. We'll cover that and discuss the next 24 hours. And of course, as always, we'll also answer your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, let's do some weekend coverage of things that happened, over the weekend. So the big story last week was the Fed meeting minutes. Okay, good morning, Luca. And good morning, everybody here in the room. We had the meeting minutes that showed that the Fed is a bit more hawkish, and then we had talk about a rate hike in June, still unclear, but the dollar strengthened in general. And then we had Dudley sort of moving a bit, leaning towards the hawkish side, talking about June or July, warming up, let's say, not fully in the June camp, but warming up. Over the weekend, we had two more Fed officials speaking or giving interviews to various media outlets. So Eric Rosengren of the Boston Fed, he was considered a dove, but in recent months he's moved to the hawkish camp. And also in this weekend interview, he said that he's ready to pull the trigger. So he's trigger happy. Good morning, Ed. But on the other hand, John Williams of the San Francisco Fed, considered also relatively dovish, close to Yellen as well. He also provided some hawkish comments over the past few months. He sounded a bit more cautious, sort of coming into this the June meeting with an open mind, but not really sure. So this sort of leaves a mixed message. He was more on the hawkish side beforehand. So I would say this a little bit weighs on the US dollar because Williams is considered close to Yellen, and he isn't sort of on the hawkish bandwagon. Okay. So now I'm showing you the chart of euro dollar. We're seeing the US dollar weaken just a bit. All in all, this is range trading, of course. Euro dollar is now at 112.36, moving closer to 112.50, which worked as support a few times in the past, but isn't going really fast. It's a slow Monday morning for everybody. Good morning, Sirik. Good morning, everybody. So for euro dollar, it's a slow morning. It's 20 pips above the lows, and above the opening levels, and well within the range. The range is 111.80 to 112.50. Same goes with the pound. The pound is also a bit stronger against the US dollar, 145.25. Towards the end of trade on Friday, we had pound dollar slide towards the lows, finding some support here just under 145, taking profit after a positive week. Last week we had quite a few opinion polls showing more support for the Remain campaign, or as it's called, Remain. And the last minute we've seen some profit taking on pound dollar. Anyway, 145 to 145.80, 146.50. On the downside, we have 143.70. Let's continue. Dollar yen. Here we're seeing already a bigger move against the US dollar. A bigger fall within the range. We fell back under 110. Okay, dollar yen is 50 pips down on the day, 109.56 at the moment. Support there at 109.40, 109.50. It was sort of a messy line. Dollar yen got stuck at 109.40, then managed to edge a bit higher. Lots of hesitation in dollar yen. Okay, 110 remains some sort of resistance. I would say 111 is much stronger resistance. Dollar CAD 131.05. It was a bad week for the Canadian dollar. On Friday, we had weak figures. In total, from headline retail sales and headline inflation missed expectations. That's of course Canadian data, and the Canadian dollar suffered. In general, we've seen how oil prices enjoyed some gains last week, but this didn't help the Canadian dollar. Because one of the reasons for these gains in oil prices was the wildfires in Alberta, Canada, and I mean less production in Canada, so it doesn't really help Canada if oil prices are higher if the country cannot really produce that much oil and sell it out. Okay, so 131.07 is the current level. 130.80 to 131.70 is the range I'm looking at. Aussie dollar trying to recover. Just one more comment on the Canadian dollar, contrary to other currencies, where we've seen a weaker US dollar. In dollar CAD, it's quite balanced. Okay, and here in the Australian dollar, we're seeing the same trend as in euro, and the euro, in the pound, and the yen. Weaker US dollar against the Australian dollar as well. Almost 30 pips moving to the upside. Last week we hit a low of 71.75. Currently 72.44. I see resistance, strong resistance at this 73 level. Okay, which was rejected on an attempt to break higher just before the FOMC meeting minutes last week. Okay, New Zealand dollar 68 at the moment. Very clear range here between 67.20 and 68.40. Moving to the upside. Actually, quite one of the stronger moves we're seeing this morning. It's, well, in terms of pips, 47, but in terms of percentage points, 0.7. So the Kiwi dollar is enjoying the weakness of the US dollar. It's not a risk on atmosphere because also the yen is gaining against the US dollar. It's just US dollar weakness. We can either put it on profit taking after a strong performance for the greenback last week, or also attribute this to what William said. That means not enough momentum for a June rate hike. Okay. Yeah, dollar Swiss. So also here we're seeing, well, less of a trend because we have been seeing the the Swiss franc weaken against the euro. I don't know what's behind the move. I always suspected it's the Swiss National Bank, but you never know. Morning, Fabian. Good morning, everybody. So anyway, we are seeing a very balanced picture here, just under 99 cents. The line of parity is, of course, strong resistance. 98.50 and 99 are levels of support. Euro Swiss, as I mentioned, the trend continues higher. It's a very, very slow grind. Currently at 111.11. Okay, so very narrow, no, not so narrow range. We used to have ranges of sometimes only 10 pips on Euro Swiss. Currently, we're moving a bit to the upside. 112 is resistance. Let me show you 112 here on this chart. So I'm dedicating more time than usual to speak about Euro Swiss because finally we are seeing some kind of a movement here. Okay, so 112 is the next line. We are gradually grinding up from the lows. Okay, Euro Pound here, we did have a very exciting week last week. And also this morning we are, well, this morning it's quite balanced, but quite nice technical behavior. Good morning also to Ramon. Currently 77.35 under support here at, resistance, of course, under resistance, 77.40. Used to be support line earlier, well, at the end of April. Okay. Lower support for the pair at 76.50, higher resistance 78.30, and stronger resistance 79.30. Low support is at the round number of 75. We are seeing, well, last week we had the pound enjoy a very strong recovery thanks to more favorable opinion polls in the UK, and this is also felt against the euro. Euro yen, relatively balanced in general, but this morning we are seeing the pair trend sort of drift lower. Japanese yen is showing more strength than the euro. 123 is the current level, which works as some kind of support. Much stronger support is at 121.65, resistance at 125. And pound yen, well, taking some profit, falling off the 160 level, which did work very nicely as support. High resistance is at 162.50. The next line of support is 158.50. Used to be a line for the dragon, for the Gepi. Okay, so that's where we are this morning with a regular round of currency pairs. Let's just take another look at oil. 47.76 is the current level. Off the highs, we did move above 49, didn't really close, but no cigar. We didn't touch the 50 level. This morning we're seeing it drift back down. I didn't see any significant news, any meaningful piece of news related to oil prices. I would just say it's profit taking and nothing else. Okay. Anyway, 47 is some kind of support for WTI crude oil. Remember, when we talk about oil, there's more than one index. There's also Brent oil and others. Okay, so that's a roundup for currencies and also the price of WTI crude oil. Other events over the weekend. Well, tomorrow we have a Eurogroup meeting. This Eurogroup meeting is a follow-up to the previous one. Last week, the IMF, regarding Greece, they did suggest their debt relief proposals. So the International Monetary Fund offered postponing payments. The payments for Greek payments will begin only in 2040, okay, 24 years from now, and they'll last until 2080, okay. We'll probably all be dead by then, or well, who knows, but anyway, they want to spread it out so far in the future. It's basically a significant haircut. Well, they don't say haircut, but that's what it is. Germany, of course, doesn't like that at all. Greece announced more austerity measures to get this next tranche of aid and to get the debt relief talks going. We don't see any significant impact on markets, I would say, but it's something to keep in the back of our minds. Also in Europe, we had the second round of presidential elections in Austria. On one hand, the president in Austria as a ceremony is not the president does not lead the government. It's more of a figurehead ceremonial role, but it's still he's still elected by the people, not by parliament. So it shows us where the wind is blowing. So in the first round, we had both mainstream center-right and center-left parties defeated, and the runoff was held between the extreme right Norbert Hofer and the candidate of the Green Party, which I can't remember his name. Anyway, after counting all the regular votes, it's a very, very small margin for the extreme right candidate, Hofer. But now we're waiting for the votes that came in by mail, and we'll have an answer probably later this evening. So this is also something to watch out for. Austria is not Europe's biggest country, of course, but it does show where the wind is blowing, the sentiment, if it's pro-European, anti-European, okay? And also in the United States, we have the Real Clear Politics opinion poll. So Trump and Clinton are neck to neck, okay? Trump sort of closed the gap according to national polls. If you look at the same poll of ABC from now and from a month ago, it showed sort of Trump gaining ground. The same thing for NBC, the same thing for Fox, the same thing for all the others. So it's going to be very interesting. And we had G7 meetings over the weekend in Japan, in Sendai. Was the only topic that was really on the agenda was Japan's intervention. Are currency moves in dollar yen normal, or are they excessive? Japan says that they're disorderly, and well, that sort of gives them a right to intervene. We did see a big fall from the highs. Of course, other countries such as the United States, for example, say that this is totally normal. Okay, so anyway, we didn't. No new headlines came out of that event. Okay, so. Yeah, so in many cases we didn't have headlines, but we do have some US dollar weakness to begin the week. Okay. Well, in euro dollar it's not that significant, more significant in dollar yen. What else did we have over the weekend? Oh, back on Friday, we had US new home sales. They came out a bit better than expected, more or less within expectations, 5.45 million instead of 5.4. And that the trend was already with the dollar, so it gave the dollar just another move to the upside, but now we're seeing some profit taking, all in all, as expected. And for the Canadian dollar, I already mentioned it, inflation and retail sales both disappointed. Both I mean, the Canadian dollar was already showing a lot of weakness last week, and this added sort of fuel to the fire. Well, pun intended. Anyway, that's what's going on. What's on the agenda today? Not too much. So we do have now the Eurozone PMIs. Let's look at the FX rate calendar here on Forex Crunch. We did have, let's keep it up to date. Yeah. So we did have PMIs, Purchasing Managers Indices. That's actually a survey of sort of influential people in both the manufacturing and services sectors, asking them about their expectations for the future. This is considered a reliable, forward-looking indicator. So if purchasing managers are optimistic now, that means better prospects for growth. If they're more pessimistic, lower prospects for growth. The 50-point threshold separates growth from contraction. France, the continent's second largest economy, according to this PMI survey by market, is suffering contraction, suffering an economic slowdown in the manufacturing sector. With a score of 48.3, it's under the 50-point threshold and below expectations for 49.8. Not so good news. The services sector is doing a bit better, even beat expectations with 51.8 instead of 50.6. The composite leans towards the services sector, which is much bigger, at 51.1. Anyway, this is sort of mixed, unconvincing news, I would say. In just under 15 minutes, we have the same figures from Germany. Germany, the largest economy in the continent, the locomotive of the Eurozone and Europe in general. Here we are expecting positive figures on both accounts, both manufacturing and services. Manufacturing is more important because, well, that's the sector that actually produces stuff, and in Germany it's quite a significant sector. And then we have at 9 GMT, at 8 GMT, which is 10 here in Europe, 9 in the UK. We have the all European figures. These are expected to show, well, very sort of modest growth. I would say it's less important because once we have the French and German numbers out, it's not that important. Okay. Yeah, these are figures by market for the month of May, and these are preliminary figures. They'll be revised at the beginning of June. Right. I see a few questions here. How important are single European countries' market PMIs compared to all European data? Wow, look at the indices and the yen. Okay, let's look. Well, I would say that the German manufacturing PMI is the most important indicator because Germany is the biggest country and manufacturing is a more important sector, even though it's smaller in many countries. In Germany, it is big. So I would say the German PMI has the biggest impact. Yeah. All European data. Yeah, so that's the most important one to answer your question. Yeah, Aussie also. Yeah. So yeah, the yen is on the run. Is it leading the pack? Yeah, at the moment the yen is the strongest currency, even doing better than the Kiwi, than the New Zealand dollar. Again, I would not call it a risk-off sentiment. I would call it more weakness of the US dollar. But this weakness, no, maybe things have changed since we began the show, because the yen, okay. So I'll change my narrative. It seems that there's some kind of, let's see how European markets opened, but it looks like things are getting worse for other currencies against the dollar. Euro is hardly gaining any ground, okay. The pound is back to balance, sliding against the US dollar. The Canadian dollar, well, which was balanced beforehand, now the US dollar is gaining ground against the Canadian dollar. Aussie dollar is sliding back down after moving higher. The Kiwi dollar, well, the Kiwi dollar is still showing more strength, but it's also sliding a bit. So Only the yen, at least in the past 20 minutes since we began the show, the yen is the big winner. Okay. Probably been some risk news. Let me check out, see if any headlines came out just in the last few minutes. Okay. See if it has any impact on markets. Anyway, the Japanese yen is looking quite strong. So yeah, equity markets and stock markets in the Eurozone open lower. It's not that big of a fall, but the DAX is lower, CAC is lower. Italian stock market is over 1% lower. This probably has a negative impact on risk. So when we have a risk-off situation, it's favorable for the Japanese yen, bad for all the rest. But again, it's not such a, all in all this morning, it's not such a clear picture. I mean, the QE dollar is higher on the day, 0.5% higher. The Aussie is still higher on the day, even though it's losing some ground. And also the euro is a bit in positive territory, okay? Yeah, the dollar is now strengthening against everybody except the Japanese yen. German PMI more important than the EU PMI? Yes, it is, because first of all, it's released before the EU PMI. It's not the EU, it's the Eurozone PMI. And that's what makes it more important. But also, for many traders and for many market participants, Germany, they're trading the euro as if it were Germany. And if Germany is looking stronger, that determines the whole picture for the euro. More specifically, it's just, I mean, you can have, you can see, if we have a big surprise with the German figure, and then we have a similar surprise with the EU figure, the Eurozone figure, it doesn't make a difference, because a German number has a lot of impact on the Eurozone figure. Yeah, so I hope this answers the questions. Let's see if we have more stuff. Yeah. Euro dollar is not going anywhere fast. Yeah, that's the explanation. Okay. Anyway, we'll have the Eurozone figure in, sorry, the German figure in about 7 minutes. Okay. Maybe there's an opportunity. Again, we started last week with doing these sort of, especially when we have more free time like today, doing these sort of special segments. Okay. Special segments about other things that then we are releasing it as a separate clip. Okay. So what I want to talk to you about today, just a bit, is the US presidential elections as it looks at the moment. At the moment, we have, well, it's quite clear that Hillary Clinton is going to be the Democratic candidate, even though the primaries are not over. Sanders is not out of the race. And in the Republican Party, it's already clear there's only one man left standing, that's Donald Trump. So far, there's been a clear lead for Hillary Clinton over Donald Trump in the polls. He's a very problematic figure, Mr. Trump. And I mean, many people dislike him, and for good reasons. Muslims, Mexicans, women. I mean, there are huge groups in the United States which he managed to offend. So we have it was, and there's a big difference also between them. Clinton is running close to Obama. Okay, for many it's perceived as a third term for Obama. And Donald Trump is a wild card. He says so many things to so many people. And what I'm trying to say is that Clinton is more of a continuation, more certainty. I mean, many people dislike her for various reasons, but you know exactly what you're going to get. You're going to get more of what we had so far from Obama. And Donald Trump is a wild card. It's a disruption. I call it the Donald disruption. We don't know exactly what he's going to do. The biggest problem for markets with Donald Trump is what he says about trade. He wants to get better deals with everybody. He wants to disrupt trade, contrary to Clinton, which is more in favor of these big trade agreements. Okay, so currently there was a big change over the weekend in opinion polls. We have a site called Real Clear Politics. They follow, I mentioned this at the beginning, follows the opinion polls, and they show neck to neck even 0.2% advantage for Trump on Clinton in the national polls. That means there's much more uncertainty if we're going to have less certainty for Clinton certainty and more uncertainty, if, of course, regarding the elections and the chance of Donald Trump becoming the president of the United States of America. For markets, every opinion, so far we didn't see a real impact on markets, but I believe that if we have a higher chance of Donald Trump winning the elections, if he begins leading in opinion polls, we're going to see the safe haven Japanese yen gain ground, because it's a safe haven currency, and when in times of uncertainty, you go with the safe haven. If we're going to see Clinton getting back to the lead, and things can change so many times in the next 5.5 months, then we're going to see I believe, of course, the yen weakening, and we're going to see more risk taking. Okay, risk currencies, the Canadian dollar, which is currently suffering, Australian dollar, New Zealand dollar, I believe they could gain ground. Okay, this is recorded now May 23rd. Things may change, the candidates can offer different proposals. Maybe Donald Trump will become more presidential and will offer markets more market-friendly agreements with market-friendly opinions. Maybe, and there's also another thing to consider. With Clinton, well, you probably know what you're going to get, but with Trump, even if he's elected, you don't know if Congress is going to cooperate with him, even if it's a Republican Congress. That just adds to uncertainty. Okay, I guess we'll continue covering this topic from time to time, and of course, as we get closer to the elections in a more frequent manner. But that's how things are looking at the moment. Okay, so let's go back to the regular stuff we have on the show. I see a few questions here. Question from Luca: do you have access to interest rate expectations for the RBNZ? I'm wondering about the Kiwis' stubbornness. I don't have data, like we have for the US. I do know that after the recent financial stability report by the RBNZ, the chances for a rate cut in the near future are lower. Okay. In New Zealand, market expectations are lower. That's why the Kiwi is looking relatively stable and strong against the US dollar and also against the Australian and Canadian dollars. Okay. Maybe the market pricing in June rate cut, as they think the Fed hike may keep the RBNZ on hold. The RBNZ, I'm not sure about the dates. I think they make their decision, before the Fed, and so I'm not sure. The release. Oh, sorry for that. Anyway, so the RBNZ is not expected to cut rates at the moment in June, and also I think the Fed will not hike rates in June. I think the Fed will wait until the Brexit, until we know for sure that the UK is staying in the EU, and then they might hike in July. They might tell us in June that they're ready to hike in July if all conditions apply. Of course, data dependent as always, and then call a press conference to give us another obvious hint that they're going to hike in June. Okay. Yeah. Even aliens don't like Trump. Yeah. Even if he doesn't get elected, actually, Donald Trump made a lot of money. this year and also in 2015. Just for running for the elections, his books are selling much more than they used to, okay, because he's in the public, he's in the limelight. Okay, we have the German, in the meantime, we have the German flash manufacturing PMI and services PMI out, and they've come out better than expected, 52.4 in the manufacturing PMI, and 55.2 in the services one. Both are better than expected. Okay, not such a big surprise, I would say, but no, not too shabby, I would say. Not too shabby. Better news for Germany, for the continent's largest economy. It looks positive. It looks better than markets had expected, and the impact is not what it used to be on the euro. So this is well, let's go to the 30-minute chart to see if we had, well, look, euro dollar is a bit higher, but I wouldn't call a rise of 5 pips very significant, isn't it? Right? Anyway, here we are with German data, and you have any more questions? Had our segment about the US elections, the special segment. It's a topic that we can easily cover again and again. Of course, the next big thing in terms of politics is the Brexit referendum. It's exactly 1 month. We're today on May 23rd, and the referendum is held on June 23rd. On June 26th, we have also elections here in Spain. Let's talk about other events we have this week. Oh, I have a question here. China has quietly baked out over 220 billion in bad debt in the past 2 months. Okay, I didn't know that. Can you provide some link to more details about this? Anyway, there's lots of talk about in markets about China's debt problem. It's private debt, not public debt like in Greece or in Japan. And we know that, banks are lending relatively easily for development, for building homes, and for other things in China. And of course, what we usually get with these kind of events is a bubble, and bubbles can burst. And there's been an in-depth article in The Economist a few weeks ago and about the Chinese private debt, and that pushed the topic higher on the agenda of many market participants. Luke asks, are there any other Brexit polls I missed over the weekend? I didn't see anything over the weekend. Towards the weekend, we did have a few opinion polls that showed, again, sort of a trend towards the Remain camp, but nothing. Let me check out this website. I use UK Polling Report. No. YouGov. Yeah, sorry, we do have something. We do have, yeah. It's from before the weekend, but anyway, Comres had a new EU telephone poll. In the Daily Mail, top-line figures show Remain at 52% and Leave at 41%. Okay. There's also a big debate in the UK if polls are really good or not, because we had this issue with the general elections. They showed a tight race between Labour and Tories, and eventually it was quite a strong victory for the Tories. So again, I would look not at the basic numbers, but more on the trend. Okay. Anyway, thanks Ed for sharing this. China steps up the war on banks bad debt. So here's the article. Okay. Yeah. In theory, the Chinese government since late 2012 is cracking down on corruption. So, and trying to educate people to be a bit more modest, not extravagant. So yeah, here's the 220 billion US dollars that you mentioned. Government-led program where banks trade short-term loans to local government companies in exchange for bonds with longer maturity, certain value. Yeah. Okay. Yeah. I tried to help the economy with more debt, but that can get out of control, as we all know. Okay. Anyway, we have a few more events for today worth mentioning. We have, now we have the Eurozone PMIs, a bit better than expected in Germany. At 10:15 GMT, James Bullard of the St. Louis Fed will talk. He's almost always very happy and optimistic. He'll probably talk about a rate hike in June. If he talks about rate hike in June, I don't expect any market movement. If he becomes a bit more dovish, then we can perhaps expect the US dollar to fall, sort of backtracking. I don't expect him to say anything like that. At 1:45 GMT, we have the market manufacturing PMI in the United States. In the United States, ISM carries more weight than market. And this is the preliminary figure anyway. I missed another event. At 2 GMT, we have, at 12 GMT, we have John Williams speaking once again. Should be perhaps less, as Williams talked about, showed hesitation regarding the June hike. Maybe you will have some clarification from him. So I would note out both speeches, Bullard and Williams. At 1:45 here, 1:45 GMT, the market manufacturing PMI, we don't have expectations. Anyway, it has been just hardly at growth territory, 50.8 points last time. This is the preliminary figure for May. We also have a 2 GMT consumer confidence in the Eurozone. Expectations are for it to stay in negative ground, minus 9 points instead of minus 9.3. Still pessimism from Eurozone consumers. And and also late at night, a speech by Harker. Well, Harker is a relatively new member, and we didn't hear anything really significant from him so far. Well, worth mentioning. I'm not sure if worth listening to, especially at that hour. And tomorrow, relatively very early in the morning, of course, before the show, we have Glenn Stevens of the RBA speaking. Let's see if he moves, if he talks down the Australian dollar, like he likes to do in so many occasions. Okay, so these are the events for today. As often with the Monday mornings, Mondays in general, the economic calendar is quite lightweight. Okay. China as bad as the EU for bad debt. Yeah, for debt. Lucas's bookmakers odds moving heavily for the stay campaign. Yeah, that happened during last week with many polls supporting Remain. They beat polls hands down in accuracy, statistical, adding to my long-term table and long area. Okay. Yeah, I think also what Mark Carney said 10 days ago also helped the Remain campaign, because Brits do have a lot of esteem, do highly regard the Bank of England, and when the Bank of England warns about a recession, it's considered less of a fear-mongering by politicians and more of a professional assessment. Anyway, thanks for the chart, Luca. Adding to my long-term cable, perhaps we'll need to see more opinion polls to support the pound, but the picture remains more positive for the Remain campaign. I think it isn't over yet. I think we'll see more ups and downs in the next month or so. A comment here by Ed on what's going on in China. The proposal entails nothing short of nationalization on a grand scale, one which gives China's impaired commercial banks. Yeah, the state and the private sector are quite intertwined in China. So, yeah, the People's Bank of China, this is the central bank there, is proposing the biggest debt for equity swap ever seen. Yeah, well, everything in China is huge in general, and there's lots of bad debt. So the yuan looks to get weaker in a covered way. The USA can't say China is devaluing its currency. Yeah, the Chinese yuan is trading very, very closely, almost pegged to the US dollar. Of course, if China devalues its currency, there are a few problems there. One problem is that this might trigger more capital outflow out of China. And this is something that is undesired for China that wants to have its currency as a reserve currency. And it means worse trade conditions for the United States and for Europe and for all the world. China is the number 2 economy in the world. Anyway, okay, so that's covering the events for today. And let's get to the wrap-up for this morning. So this is the wrap-up for the live market open for Monday, May 23rd. Had a few developments over the weekend. 2 Fed officials were speaking. Rosengren of the Boston Fed is trigger happy. He's ready to pull the trigger. But Williams, considered close to Yellen, is not so sure. That sort of weighs on the dollar just a bit. And well, in addition to some profit taking. News from the Eurozone. Let's see how things turn out. Greece announces more austerity. The IMF wants significant debt relief, pushing it way, way into the future. I'm not sure Germany is in agreement. Trump and Clinton, for the first time, neck to neck, according to the average of polls held by Real Clear Politics. G7 results in nothing, much to do about nothing. On Friday, we had US new home sales coming out more or less as expected, sort of helping the US dollar, and Canadian inflation and retail sales missing out, missing expectations. This morning, we are seeing a bit of a risk-off sentiment, but mostly we're seeing the strengthening of the Japanese yen. But let's begin from euro dollar, very much in range. 112.50 is resistance, 111.80 is support. Okay. Pound dollar, basically unchanged, 145 support, 145.80 resistance, 143.70 support. Dollar yen, here we are seeing a movement. We are seeing the pair fall all the way. It fell to 109.40, which was the previous line of resistance. Let's see if it really holds up as support. Next support, 108.40, resistance, 110. Dollar CAD, the Canadian dollar remains unconvincing. 131.20 at the moment, in range between 130.80 and 131.70. Prices are a bit lower this morning. Australian dollar, after opening a bit higher, is now sliding back down. 72.25 is the current level. 71.75 support, 73 resistance. And the Kiwi dollar is showing a lot of strength there in comparison to its peers, quietly moving higher within the range, within the 67.20 to 68.40 range, currently at 67.92. Okay, and for today, relatively light calendar. So far, Eurozone PMIs, well, a bit mixed, but basically a bit better than expected. German manufacturing PMI beat, French manufacturing PMI missed. Services sector figures both beat expectations. At 10:15, we have James Bullard of the St. Louis Fed speaking. Let's see if he remains optimistic. Then we have also at 12, John Williams. Let's see if he remains skeptical or if he returns to being optimistic. Also watch out for the market manufacturing PMI, Eurozone consumer confidence, and perhaps the most important event is only tomorrow morning, in the next 24 hours, a speech by Glenn Stevens. I believe that markets will move today on sentiment, on oil prices, stock markets more than events, but I would say that these 2 Fed officials could have an impact, especially on a light calendar. Okay, so that's it for today. Thank you very much, everybody, for coming. Please give us some feedback to me directly, to Adinda, to Mauricio. we're doing these special segments. This time I did it about Clinton vs. Trump and currencies, and of course, a topic that is easy to follow up on. And yeah, so I guess that's it. So thanks everybody for coming. Wish everybody a safe and successful day in markets, and see you tomorrow. So thank you and bye-bye.